Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody, guys. Let's talk about the Australian dollar today. But in general, it's really the thankless job to make any forecasts or analysis prediction today at the eve of the Kerry and Lavrov meeting in London, and the eve of the voting in the Crimea and Ukraine, and the eve of the sanctions that should be announced on Monday from the European Union. So we will just discuss what we see as a technical picture, but everybody understands, I suppose, that all situations on the financial markets could shift from top to bottom in the blink of an eye if something will happen. Any surprise, negative or positive, will happen within the nearest 3 days. So let's see what we have on the Australian dollar. If you remember, a couple of days ago we said that market is showing not quite reasonable and not quite logical action in relation to reverse head and shoulders pattern. And we know that this pattern suggests the upward action with the target somewhere around A, B, C bottom. D pattern is forming as the head and the right shoulder as the ABCD pattern, and that is the possible target of this reverse head and shoulders pattern. And when the market approaches to the neckline, it should show the breakout. But if it fails to show the breakout, this is the warning sign, and this is not logical behavior for particular this pattern. That could indicate the possible opposite action. At minimum, market could show the retracement right back down to the lows of the right shoulder, but as maximum, this could lead to the failure of this pattern and reversal to the downside. That is also possible. At least when the head and shoulders fails, market usually has the tendency to clear out the head area. Well, right after our analysis, market has shown really significant action to the downside, and when we have discussed this situation, we said that here is the bearish dynamic pressure is forming, because market is showing the downward action while trend holds bullish, and that is a point on possible taking out of these lows. But on the next day, there was the release of the job report on Australia, and has shown the significant surge that has led to this positive reaction. On this report, market has returned right back up to the neckline. Neckline itself is really significant resistance, because this is not just the neckline of the pattern. As you can see, that is also monthly pivot resistance 1 and the Fib resistance 90-80 area. And the monthly pivot resistance 1 also has the special meaning, because we know if market is starting some retracement on the bear trend, right? And the monthly pivot resistance 1 holds this retracement. It tells that previous trend down still valid, and it tells that market has the chance to continue this trend in the nearest future. That's why this area is also very significant. What do we have right now? Whether our setup has failed? Absolutely not, because this stop has not been vanished, and market has not returned right back up above these highs, and has not continued move to the upside. And right now market does not show the normal action, so it hasn't broken through the neckline and hasn't started move to the upside. Instead of that, market just calling around this neckline. Also take a look that here another stop grabber pattern has been formed. Here we could get another one. Okay, and in general, guys, there are two possible scenarios I see here. First scenario is the possible butterfly. So you can see that could be the left wing of the butterfly, and that could become the right wing if market will continue to move higher. Okay, that's the risk moment. But taking into consideration, if we currently exclude the possible geopolitical tensions, and we'll take a look at only on the technicals, I suggest that the bearish setup has currently more value rather than bullish, rather than this butterfly, mostly because of this action on the daily time frame chart. So market has shown really fast action to the upside, has shifted to the bullish side. That was all issues have been done for possible breakout, but this hasn't happened. Market has failed to do this. Even positive job report wasn't able to return right back up and wasn't able to lead to breakout for the neckline. Market again failed here and turned to the downside again. That's why I suspect that if market will stay on its own and no geopolitical risk will impact the market in the nearest future, we could get the development that I see on the hourly time frame, on the 4-hour time frame chart in the nearest future. That could be the ABCD down right to the target of the bearish dynamic pressure that we have on the daily time frame. The target of the bearish dynamic pressure usually the previous lows, to taking out of these lows, and that is also the lows of the right shoulder. We have this nicely looking ABCD pattern, and take a look how fast reversal has happened after the positive report. Now market has moved below the weekly pivot point as well. So you can see market stands now below the weekly pivot point. It's a pity that today is Friday. It's not much time for market to continue move down on the current week. But in general, this picture, I think that this picture could get the more weight, more chances, rather than, for instance, here some butterfly, okay, to the upside. Because this scenario coincides with the previously made analysis, and this reversal really is fast, so you can see it's not just some sort of the retracement. Also, we have some other factors that we have just discussed pointing on the possible bearish scenario here. Well, the target of this pattern stands precisely at the lows of the right shoulder and precisely at the target of the bearish dynamic pressure on the daily time frame chart. So this is 88.90 area. But in the medium term perspective, if this will happen, I can't exclude that the market even could make an attempt to erase this head and shoulders pattern. We will see what will happen. On the hourly time frame chart, we see a small reversal pattern, that small butterfly that has been formed here. Market has reached the 50% support, okay, of this thrust up. So some retracement up could follow, depending on how it will develop. If it will be gradual action to the upside, we could think about the taking short position somewhere around this area or that area, around some fib resistance levels. One thing that we do not want to see is the such sort of action to the upside. If market will show this really fast action to the upside, that will be the indicator that we should not take any short position. Something as we have discussed yesterday on the Japanese yen. So although the Japanese yen has formed the butterfly yesterday at the level that we thought could be suitable for taking the long position, but right after that, market has shown the really significant plunge down to the next area, and we said that if we will see something of that sort, I will show you. Sorry, that's the gold market, Japanese yen. Just a minute. I said that if we will see something of that sort, right, we should not take any long position. So when we have seen this, we've got this pattern. We would like to see such sort of action, but we've got this one, and we should avoid the taking the long positions. So our setup, the setup on the Japanese yen hasn't been vanished yet totally, because the invalidation point stands right here of the stop grabber on the monthly time frame chart. Well, but this is the warning sign for this, and having this action on our back, we understand why this has happened. Having this action on our back, it's not reasonable to take the long position when you have such sort of action against you. It's better to wait, and if market will prove that it's really turned to the upside with some action, it's better to take the position on the retracement when the situation will be more bullish rather than right now. Well, but on the Australian dollar, as I said, we could wait for some bounce, and still as our setup still valid, and if technical will dominate over the market and will not be overruled by the geopolitical factors, I think that it's not bad chances to get the possible downward development, at least to the target of the dynamic pressure, and at least to the completing point of this ABCD pattern around 88.90 area.